Hey, I'm Zeke,
And I'm Brian.
and you're watching Two Guys Talking Home Buying.
Hey, thanks for joining us on today's episode. We're really excited to share with you some great things about first-time home buying. On this show, our goal is super simple. We want to help as many renters as possible to buy their first homes, and not just to buy the house, but to actually buy the home and have fun doing it, to go through the process where you enjoy it instead of it being all stress or worry. So that's our goal with the show. If you're a first-time home buyer, we hope that you find this helpful. We're going to cover everything on this show, from the beginning of the process to the end of the process. And specifically today, what we're going to talk about is
Step 7 of the 9 steps to purchasing your first home, which is the first part of escrow. Hey everyone, I'm Zeke. I'm the social media director here at Showcase Agency, and I'm also looking to purchase my first piece of real estate. So I have a lot of questions for today, and I'm sure Brian's gonna be able to answer all of them. He's super experienced, been in the industry for a while now, so yeah.
Yeah, and my name is Brian. I'm the president and co-founder of Showcase Agency, and we're a real estate and mortgage company. So we help people to buy homes, to sell homes, and to get home financing. I've been doing this since 2005. I got in the mortgage business back then. My wife Karen is the co-founder of Showcase Agency, and she's been a licensed realtor since 2001. Together, we've been through a lot of transactions and over 38 years of combined experience. And we thought it would be fun. Zeke, like you mentioned, is going to buy his first home sometime this year is his plans. And we would talk a lot of times off camera with his questions. We were like, wow, let's get these questions in front of the camera and see if these kind of questions and answers will help out our first-time home buying viewers. So thanks for joining us on the show. We got a great episode today. We're going to be talking about step number 7 out of the 9 steps to buy your first home. And step 7 is escrow part 1. And so we break escrow into 2 parts. Part 1 is basically from the time you open escrow to the time that you remove your contingencies. So that's a very different period that you go through than escrow part 2, which covers, right after your contingencies have been removed, all the way up until the time that you actually take possession of the home. So today we're going to talk about escrow part 1, opening contingencies all the way up to, opening escrow all the way to removing contingencies. And stick around to the end because we are going to have a special offer for anyone that's a first-time home buyer. So let's go ahead and jump into it. And what's your questions?
Awesome.
Let's hear them.
So how do I choose the right mortgage insurance company?
Okay, that's a great question.
Thank
And
you.
the answer is you cannot. You don't get a choice. So there's 2 types, there's kind of like 2 different types of mortgage insurance. One is called private mortgage insurance, or sometimes referred to as PMI. And that type of mortgage insurance goes along with a conventional loan, also called a conforming loan, or a Fannie Mae or Freddie Mac loan. So there's a lot of different terms thrown around that all mean the same thing. So if you're getting a conventional loan and it has mortgage insurance, it's actually what's referred to as private mortgage insurance. And the lender will work with a mortgage insurance company on that mortgage insurance. So it's not something that you get a chance to shop for. The lender chooses it. On an FHA loan, the mortgage insurance is provided by the FHA, Federal Housing Administration. It's not provided by an outside party, so it's not private mortgage insurance. That mortgage insurance is sometimes referred to as MI or MIP, mortgage insurance premium. And so on that one, again, you don't get a chance to choose it. So mortgage insurance is not something that you get to shop for.
Wow, okay, I didn't know. Thanks
So
for answering.
So one less thing you have to do. You don't have to do
Yeah,
that.
right, okay. Second question is, how do I transfer my gift funds into escrow?
Okay, great. So if you have gift funds, meaning you're getting money given to you by someone that's acceptable, when I say acceptable, there's rules to gift funds and the transfer of the money, which is what you're asking about. And the person that's donating the money has to be an acceptable donor. Most of the time that means that they are a family member, aunt, uncle, cousin. Those are allowed. Sibling, parent, that kind of stuff, that's allowed as well. So it would have to be an acceptable donor. And then you're going to want to check with your loan officer specifically about what kind of paperwork is required. Now, the reason I say that is because depending on the broker, the mortgage broker, or the mortgage lender that you're working with, they may have a slightly different procedure than a different company. So whatever I tell you might be different for that company. Some of the ways that it usually works is the donor will either wire the money directly into escrow. That's an option that we use a lot. So the money doesn't actually change hands from the donor to the person that's buying the home and then to the escrow company. In this case, the donor would just send it directly to the escrow company. So that's one way that usually works really well. Another way sometimes is where the donor will write a check, give the check to the buyer, and then that buyer goes and puts the check into the bank. So sometimes that's the preferred method by the lender. In a situation like that, you're going to have to get like copies of the check. You're going to have to, show that the check cleared. And if you did the wire, you're going to have a copy of the wire. You're going to have to also have proof that it has cleared, that it has deposited. And the other thing about this is you're going to have a gift letter that's filled out by the donor that accompanies whatever other documentation is needed. Like we just talked about, if you did the wire, you might need the wire confirmation. If you did received a check, then you would need that copy of that canceled check and to show where it actually deposited into your account and that kind of thing. And so if you needed to provide that documentation, you can provide that with the gift letter. But the best thing to do is to talk to your loan officer directly, because your loan officer will know exactly what the lender is going to require for the gift funds.
Awesome.
Does that make sense?
Yeah.
Okay.
Got it.
Right.
Thank
I got
you.
a little long-winded. Sorry about
You're
that.
good. My next question is, can I back out if there are too many repairs?
Okay. So you can always back out of any contract. Any contract. The thing is that it's a contract for a reason. The person on the other side was probably expecting you to perform in some way. So if you're backing out of the contract, even though you're technically not supposed to back out of the contract, then you're out of that contract, but you may be, there may be legal consequences. The seller might have a reason to sue you for breach of contract. So let's say that that's not the situation we're talking about. Let's say that, what was the question again? It was about repairs.
Yeah,
right?
yeah. So can I?
So you're talking about like, you had the house inspected and now there's more repairs than you want. Okay.
Exactly.
If you still have your inspection contingency in place, and we talk a lot about contingencies because those are your safety nets or your earnest money safety net. So if you still have your inspection contingency in place, then if you don't like what's on the inspection, then you can either cancel because of the inspection and get a refund of your earnest money. That's typically how it works, unless there's something specific written into the contract otherwise. That would be a situation. You get the inspection back, you don't like what you see, you don't want the house at all, and if your contingency for the inspection's in place, you cancel, you get your money back. Let's say that you want the house, but you just want a better deal. That's where the request for repairs comes in. That's a specific form that the realtor fills out, submits over to the listing agent for the seller to review. And basically, when you're submitting a request for repairs, you're saying, hey, here are the things that I've identified that I want fixed, and here's what I'm asking you to do. And you may be asking the seller to fix those things. You may be asking the seller to give you a price reduction. You may be asking the seller to just give you a credit so that you can fix those things later. So you have options, a lot of options, if you still have your inspection contingency in place. But if you don't have that inspection contingency in place and you want to back out, you can back out, but you may be, you very possibly lose your earnest money. The seller might be able to come after you for additional damages or whatever. So, yeah.
Wow.
Yeah. So that's why those contingencies are so important.
That's awesome.
Yeah.
Thank you.
Cool.
My next question is, do I pay for the liens?
So do you pay for the lien? So if were you talking about like a tax lien?
Like
kind
the
of
house, like the house liens.
Okay, so one of the liens that's on the house most of the time is a mortgage. So
Okay.
that's an example of a lien. A lien is just something. It's just like a placeholder that's put on the property, so that the property doesn't transfer, so that somebody doesn't sell this house and pocket the money, but yet they owe a bunch of people money over here.
Okay.
So the people that are owed money, they attach a lien to the house. So because they owe the bank money for the mortgage, there's a lien attached to the house for the mortgage. So it's understood pretty much that that all the liens are going to have to get paid off. The lien would be like a mortgage lien. You don't see a lot of property tax liens here, because a lot of times the taxes and insurance are paid through the payment as part of the impound account. So even if the person isn't making the payment, the servicer is still paying the taxes and insurance and stuff like that. It could have a mechanics lien. We've talked about that before in an episode. That's where, like, for example, you have a roof put on your house, and you and the roofer don't agree on something, and the roofer puts a lien on the house because they feel like they're owed more money. So typically the seller is the one that's going to make sure that all of that stuff is covered. That's usually coming from the money that they're receiving, for the house. There are some special situations where somebody has maybe gotten into a really bad financial situation and there's some different liens on the house, and for whatever reason the liens can't get paid off in order for the transaction to close, and sometimes the buyer will take some of those things on. That's just a very odd, unique circumstance. But most of the time, whatever liens are on the property, the seller's aware of, and they're gonna they're expecting to pay them
Okay.
off through the transaction.
Okay.
Yeah.
Cool.
So it's not something that you would normally worry about.
Gotcha. Thank you.
Yeah.
My next question is, can I choose my home inspector?
Absolutely, yeah. So when it comes to your home inspector, choose whoever you want. Your realtor, your loan officer, they both might have some suggestions for you. You can also, of course, Google, look for reviews, things like that. But definitely you can pick, whoever you want.
Awesome. Thank you.
Yeah.
And then next question, can you still negotiate the price at this point?
So sort of. At this point, you've agreed to a price, and that's your contract price. Now, if you get the inspection back, like we talked about, and you feel like, all right, well, I'm paying, too much for this house because of the things that, the condition of the house, I wasn't aware it was going to be this bad. In a situation like that, you can go back and you can, renegotiate like we talked about. You can ask for them to make the repairs. You can ask for them to lower the price. You can ask for them to give you money towards your closing costs. So you are able to go back and negotiate. Now, whether or not the seller is, going to bend on anything is just going to depend on,
Okay.
different things.
Perfect.
Yeah.
My next question is, you already kind of answered this one, but it's, can the seller deny the repairs?
Yeah, and so the seller can deny the repairs. The seller can say, you know what, you're asking for $10,000 worth of stuff, I'll give you $5,000, so they can counter your request for repairs. Whatever you end up agreeing to, you want to make sure that it's agreed to in writing. What you don't want to do is agree to, you know, have a verbal agreement with the seller but nothing in writing, and then you do something like you remove your contingencies. And then once you remove your contingency, what if the seller says, you know, I'm not going to put that in writing, and now you've removed your safety net and you don't have anything in writing, it's just all kind of he said, she said stuff.
Oh, wow.
Yeah.
So you kind of tricked into...
Yeah, and you know, maybe they didn't intentionally need to do that, but as the buyer, you know, you want to make sure that you've got everything you're expecting in writing, because that's what's going to be referred to if there's any issues later on, if there's any disagreements.
Perfect. Thanks for answering that.
Yeah, absolutely.
My last question is, can the seller raise the price if the appraisal comes in higher?
No, they can't. You know, the only thing that they could do is they could cancel the contract and then try to put the house back on the market and get a higher price for it. That's, you know, only thing they could do. Like we talked about earlier when I was saying anybody can cancel any contract. Again, if the seller is canceling because they think they can go get more money, then now you are on the other side of the lawsuit. You know, you can actually take legal action against them for damages. So a lot of times the seller doesn't want to risk that kind of, you know, problem. So even if the appraisal comes in higher than the purchase price, you know, they're typically just going to stick it out. They may not be too happy about it, but, you know, they'll stick it out. And when it comes to the appraised value, the appraisal is something that is shared from the loan officer to you. It's not even, a lot of times it's not even shared directly to your real estate agent, but it is definitely not shared to the listing agent or the seller. So if the property does come in higher, you don't necessarily have to give them a copy of the appraisal or tell them, you know, the value that it came in at. You can just say, hey, we don't have any problems with value.
Oh, wow. Okay,
Yeah.
Perfect.
Yeah, so that's one way to do it.
Perfect. Thanks for answering
Yeah,
that.
sure. You said that was your last question?
Yeah, that was my last.
I was just going to see if I got anything else here. So just a little bit real quick, just to kind of summarize some of the things that you're doing when you're going through step number 7 of these 9 steps. When you're in this first part of the escrow process, you're going to be opening escrow. So that means that both sides of, you know, you as the buyer and then the home seller, they've, you know, you guys both have signed the contract. So now we've got a legally binding contract. What you've got to do is get your earnest money into escrow. That's really like your number one job once your offer is accepted. So that's what you want to focus on. Get your earnest money into escrow. Once you've done that, another thing that you're going to want to do is shop for homeowners insurance. You're going to have to choose an insurance company for your homeowners insurance. So that's something that you would do at this step. If the property has a solar panel lease, so not where the homeowner owns the solar panels, but where they're being leased, you'll also have to get approved by the leasing company for the lease that is going to be transferred into your name. So they're going to do a credit check and some other stuff. So, you know, that's just part of the process if there's a solar panel lease. The thing that's going on here in this first part of escrow is you're now dealing with a lot of deadlines, a lot of timelines. If you've got your 3 major contingencies in place, loan, appraisal, and inspection, all of those have deadlines. And so now you've got to get your home inspection scheduled because you want to get the inspection done and have a chance to review it with your agent and make some decisions before you get to the very end of the contingency period. The same thing with the appraisal. You want the appraisal out of the way before you get to the deadline for the contingency. You want your loan approval to be done before you get to the loan contingency expiration. So now you've got all of these deadlines. The clocks are ticking, and you want to start making sure that you're getting these things moving, because if you wait and you don't, order something right away, or you don't sign something right away, it can really cause a lot of delays. So in this first part, that's one of the things that's going on. You're beginning to sign loan disclosures from the lender. You're starting to talk a lot more with the loan officer, because now the loan officer is involved. This is also like, we covered, this is when you would go through the request for repairs, if there was going to be one. And like we also talked about, this would also be when you would cancel the contract if you were canceling for whatever reason. So that's kind of all of that in a nutshell. And you got a viewer question too, right?
Yes, I do.
Sounds good. We're going to come back to this viewer question in just a second, but first check this out. If you're a first-time home buyer, we think you'll find it interesting.
Hey, it's Brian at Showcase Agency. If you're going to buy a home and you're thinking, man, I'm taking out this giant loan and making this huge commitment, and I just want to go with my best option, then we've got two great offers for you. The first is the Beginner's Guide to First-Time Home Buying. If you're going to buy your first home, it takes 9 steps. 9 steps to go from renting to owning. This comprehensive guide covers all 9 steps in detail. You can download it for free at showcasefreeguide.com. The second offer is a discovery call with me or Karen. Either of us can answer every question you have about buying your first home, and we can direct you to additional resources we're sure you'll find helpful. There's no pressure, no sales pitch, there's no obligation or hassle. You can sign up at showcasecall.com. And just because it's another 6 months or a year before you're ready to buy, that doesn't mean you shouldn't be thinking about it now and planning ahead. Pick up our free guide for first-time homebuyers at showcasefreeguide.com and schedule a discovery call so we can go over your plans and timeline together. We can answer all of your questions, and we'll send you links to additional resources you'll find helpful. Go to showcasecall.com.
All right, we're back. So, hey everyone, I got a viewer question now. Let's go right into it.
Let's hear it.
When you get a loan, is it possible to negotiate what you pay monthly for your mortgage?
Yeah, so your monthly payment is, related to the term of the loan. So if you've got a 30-year loan compared to a 15-year loan, the 15-year loan, shorter loan, so the payment's higher. So one way to get a lower payment is to go with a longer term. Another thing that brings the payment down is going to be your loan amount. So a lower loan amount is going to have a lower payment. The interest rate is the thing most people think about that determines the payment. So when this person is talking about negotiating, keep in mind that there's 2 sides to the loan. You've got the payment side and you've got your closing cost side. Now, like we've talked about in a lot of videos, when we talk about the mortgage seesaw, when you get a lower interest rate, your closing costs go up. When you get lower closing costs, your interest rate goes up. So you can negotiate where you can say, hey, what other rates do you have? You can negotiate, or you can offer to negotiate with the loan officer, and they may be able to get you into a different program. They may be able to lower your interest rate a little bit, or maybe lower your fees. It's really hard to say. A lot of companies are going to have a we don't negotiate kind of attitude. It's like, here's the price, and it is whatever it is. But it doesn't hurt to ask. And if you're following our advice, which is to get 3 quotes, compare those, take those quotes and share them with all 3 loan officers that you're talking to, and get them to, give you a little bit of commentary about the other 2 quotes, and get them to explain their quote and talk to them and see if they can, do something better for you. So you can always ask.
Perfect. Thanks for answering that.
Yeah, absolutely. Absolutely. So, hey, we hope you enjoyed this show. We've got a lot of great resources. Check out snackstv.com. This is bite-sized videos on our YouTube channel, all for first-time home buyers. We're also ramping up a lot of new episodes here for 2 Guys. And our social, we're putting out all new content every day, all week, every week. And, we'd love for you to check all of that stuff out. If you're going to buy a house and you've never bought one before, check out our free guide on home buying, and you can pick it up at showcasefreeguide.com.
Perfect. Thank you for that. And then also, if you guys have any weird questions, feel free to drop them down below in the comment section, and we'll be sure to get to them in one of our videos. And also, please turn on your post notifications to see when we upload next. Hit the like button and then subscribe.
Perfect. Sounds
Awesome.
good. It's a lot. Do it all.
Awesome.
All right, cool.
So we'll see you guys.
Yeah, thanks for watching. Take care.